The Bitcoin price has been ranging sideways for 7 days. What in the world is it waiting for? Let's take a look. All right, what's going on YouTube? Welcome to my channel. Welcome to the Jim of All Trades channel. Glad you made it by. My name is Jim. I'm a crypto trader and a Forex trader here to help you understand the market from an Elliott wave perspective. Guys, not here to give you financial advice. Just want to show you how I'm seeing the market today. Let's dive into a big question that a lot of people have. Well, what is Bitcoin waiting for? For the last 7 days, Bitcoin has remained in a range. And when the market stays in a range like it has, if I blow this up on the 30-minute, you'll see the range that it's been in. You know, say, what in the world? What in the world is it waiting for? Well, the market is correcting, guys. It's in the middle of a complex correction, more than likely. And that's one of the things you have to really learn as a trader, to be patient for and through. You have to understand how to read them and how to count them. As an Elliott wave trader, that's what we specialize in. We really look at these corrections. We follow them into their entirety, so we know how they play out, and we're ready for the next move once the correction is finished. And you have to know what the signs of those ending corrections are. But basically, I just want to talk about how to identify when the market is correcting and when it's in a complex correction as well. Sometimes there are different versions of corrections. There are lower time frame corrections and there are higher time frame corrections. And we'll just talk a little bit about where we are in Bitcoin now and where she might be heading here in the future. The best way to see and understand Bitcoin is just kind of study its past. Okay, let me first off show you the difference between a simple correction and a complex correction, and I promise we'll get to the current price action and apply what we're learning here. But I just want to give a little tutorial as we go through, as we go through the charts, and as we kind of have these down days. There's not a whole lot to talk about in the market, but maybe I can give some of you some help along the way as you're studying Elliott wave. Simple correction. Basically, a simple correction is where you have 3 waves, and that's all you get. You get 3 waves. Whether it's going to be a 5-3-5 or a flat, like I shared with you yesterday, or even maybe even a triangle. Now you might debate on whether a triangle is a simple correction. It's a little bit more complex for sure. But when basically you only have one type of correction showing on the screen, not strung together with several other corrections. Let me show you what I'm talking about here. Right here would be an example of a simple correction, okay, where you have an A, a B, and a C. Now in the middle of that, on the smaller time frame, there was a complex correction for the B wave, which often is the case, right? So, but the B wave here, it would be a complex. If we dove into there, we would see a bunch of 3s. In fact, shall we do that? Let's do that. Let me replay this just a little bit there, just to get us back there. I'm going to go down to a smaller time frame, and let's just look at that B wave, and it's right here. That B wave right there. What you're going to find is that there's a bunch of 3 waves in the middle of it. Let's see if we can identify them. From the top here, we're going to go, there's 3 there, then there's 3 there, and there's 3 there. And that's a complex correction. That's what we call a WXY, where you string several corrections together, okay, and it elongates that and takes time out of the market and whatnot. And so that would be an example of a complex correction on a smaller time frame in the middle of a larger on a higher time frame simple correction. Let me go back here. There we go. I'm going to cancel that replay. Boom. Right. There we are. So we have complex and we have simple. Complex is when you string 3 wave moves together, one after another. So this was a simple correction on a larger time frame, and on a smaller time frame in the middle wave of that simple correction was complex. So that's you can understand the different nuances of time frames. Now let's just look at this correction. This correction was also a higher time frame correction. That was a complex correction, and we'll look at the difference here. It's where you begin to see 3 waves everywhere. Okay, and this is one of the telltales. There's 3 waves there. Okay, then you had 3 waves right there. Okay, 3 waves back to the upside, and this was followed by 5, and so that was a little tricky as this was being made, but there it is. That's a running flat, like we shared yesterday. That's a running flat here in the middle, and then you have 3 more waves to the upside, and so what that became was a W a 3, a 3, and a 3, WXY. When you pull the fibs on that, you look at the extensions of where that should go. You'll notice it comes to the 786. We normally like the 786 to the 1-to-1 is normally where we like to see it, all the way up to the 1618. But nevertheless, that's right in the range of what we expect for a correction. But this would be a complex correction. And what that does is it takes time out of the market and it creates liquidity. And that's really, really important. Okay, and traders, as markets move, liquidity is critical for market makers and those running this market. Why? Because they need to take your money, right? And so at the end of big moves like this, well, there are people that believe the price needs to begin going up, and there are people that take longs in here. And as price corrects, they're like, no, that's just a correction. And there are people that'll take shorts in here, okay? And every time the market goes down, people are taking shorts. And every time the market is taking longs or going up, people will take longs. And the market will confirm the down bias for the down guys and confirm the up bias for the up guys. And they'll even take out highs just to further convince you of a move one way or another. It's to confuse traders and to snag liquidity. What is liquidity? Liquidity is simply money moving. It's liquid money. It's you giving your money away in a trade. It's you saying, hey, here's my money. I want to bet it on one direction or another. And within this range, there are people taking trades both long and short, and basically stops are then based upon previous highs and lows. For instance, anybody going short would have placed their stop somewhere up here. This was feeling pretty good going down. You're feeling pretty good about your short going down right there until it reverses on you. Well, you're okay with that until it starts taking this level out. Then you're thinking, this is going to keep on going. They take your stop out, and then they come and they continue the wave. Okay, and that's what happens in this section right here. Liquidity was created and taken. Okay. Liquidity to the upside and to the downside. Why to the downside? Well, there are a bunch of people going long down here, and it's feeling pretty good as prices going up. So their stops are down here below the lowest low. So they take out the shorts, take their stops out, and then they come and then they take out the long stops. And that's the way the market moves, and that's what corrections are designed for. Because at the end of the day, nothing goes straight down. There have to be pauses in the road. The sellers get exhausted. Okay. The buyers have to come back in and push it up the best they can, and then sellers can feel good about coming back in. So corrections are critical in the market as we look for wave structure and things of that nature. So where are we now? Well, on the 30-minute chart, we're in the middle of a correction. Okay, how do you know? Well, one of the telltale signs is that everything is threes. You got threes everywhere. Okay, well, let's look at it. You've got a 3-wave move down. You've got this 3-wave move up. You got this 3-wave move down. You got even this big extended 3-wave move up, but it's 3 waves nonetheless. So everything's 3 waves. It's 3-waving you. And I shared yesterday about expanded flats where you can get an expanded flat. And I was really expecting this wave to come on down fairly quickly in 5, but it hasn't done that. It came down in 3 waves. So it tells me we're getting a more expanded and a more complex correction than I expected. So now I'm kind of looking at the wave kind of like this, where we say, okay, I've got 3. This is a big 3 wave to the upside. This was my first 3 to the downside. That's 3 up. Okay, now we're going to continue along these lines. Now this could change. Sometimes it's really hard to predict how these are going to go, but you just have to kind of wait and watch them and look for good places to take trades. I took that long yesterday. That was a good long. I even took the short from the top. I shared yesterday in my video, but I went ahead and cut the short because it came back and I wasn't happy with it. I was like, this came down to 3 waves. So I ended up cutting the short. And now I'm just kind of sitting tight. I've got a little scalpy long in Ethereum working right now, thinking this very much could come up here, and I'm thinking that's a possibility. And so basically, we got this is, if you look at the small time frame, this is actually 3 waves. Shall I show you? I guess I will. You guys are here to learn. So there you go, small time frame. You can see the 3-wave shape there. So that's 3 waves, and then you've got another 3-wave move 3-wave move, and now I'm looking for maybe a 5-wave move up. Maybe this is going to be a flat. Maybe it'll become a large, something like this, where you get boom, and then we go down again. Okay, so you can begin to think about 3 waves and how this thing could 3-wave us to death. Right, and take time. You say, what's the market waiting for? Why is it doing this? Well, it's creating liquidity. Why? Well, all this upward pressure got everybody very, very bullish, right? We had this correction. Everybody's thinking, oh, it's over with. It was a bull trap, and here we're going to go down. Nope. It took the liquidity out down here. It created the liquidity here. People were looking for it to go long. They took the stops out first, and then they go. Take the shorts out, liquidate them. And now they're like, oh, now everybody's like, oh, it just keeps going and it won't ever stop. And so what this could be doing is snagging liquidity again, okay, one more time, and then another hit to the high. And these are actually measurable Elliott wave counts that you can actually watch and see how it's going on the chart. We'll look at that in just a minute as well. But we're in a correction. It's clear and plain that it's a correction. Now, it's not always clear until it's done. All the waves, sometimes, it's really hard to guess what it's going to do. That's what we just do our best as we're navigating through these corrections, and we take trades when they present themselves. This trade presented itself yesterday, so that was a nice little long here. And then the short presented itself, but I don't think it's ready yet. I think this needs to go up and then come down. So I'm going to be looking for a short probably there, but I don't think it's going to be. I don't think that's all. I think we're going to get 3 there, and then another 3 to break the high again. And we're going to end up channeling something like this, and it's going to be a correction, but it's going to be a bullish correction where price is actually not coming down. It's actually making a corrective wave up to the upside, and then getting everybody, hey, we broke this high, we're going to go break the high again, we're going to just keep going, and we're never going to stop. And everybody gets so bullish, and then boom, they take out all the stops again. It's the same play over and over and over, just on larger and smaller time frames. Okay, so you never know what shape they're going to make. You just have to know how to navigate them as they're being created. And that's what I teach in my Discord, and that's what we do every day when market analysis. We'd love to have you in the Discord if you want to learn how to navigate these corrections and learn when the next buy is going to be, because the next buy isn't ready. It's not ready to go long. We're not ready necessarily. Even if we pumped, which I don't think we are, but even if we pumped to 25K, we're not ready for a buy. We are not ready for a buy. All the signs and indications are pointing to a correction. The RSI needs to cool down a little bit, but it's going to correct with fake outs in such a way to entice people to FOMO in, because half of you guys are out there trying to figure out what this wave is doing. You have no idea what's going on. And they do stuff like this and say, oh, you say, here they go again, and they're going to go, and then all of a sudden they bring it back on you. And that's what the market does, because it's created anticipation and created this. And that's what corrections are designed to do. And that's what complex corrections are doing. So I just thought I'd cover that a little bit, just to give you a wet your whistle and just to help you think about corrections. My best guess, based on what I'm seeing right now, is this is going to do something like this. Okay? And so this might be a 3-wave down like that. I don't know if that's the best way to look at that. Then 3 waves up to break the high. Okay, and this is going to go up choppy probably like that. And then we're going to come smashing down. It's when we come smashing down like that, when that happens, you want to be thinking about buying. Okay, you want to be thinking about potentially buying for the next move to the upside. Okay, to show you a place on the chart where this has already taken place and you can kind of see it in action, you can always go back and look yourself. Let's go to the daily chart here and just show you one place that might be a good. It's way back in 2019. Okay, where we popped here. Okay, now this is the daily chart, but what did it did over the daily? It went up in 3 waves, came crashing down, up in 3 waves, came crashing down. And on the crashing down move, that's when you want to be buying. Okay, so when you end up getting the 3-wave shape, let me show you the 3-wave shape here. This is A, B, and C. Okay, there's this 3-wave shape. That's a correction. Here we go. All right, that's what we're looking for, guys. Learning how to navigate these corrections. If you want to learn how to do that, my Discord is open to you. We're glad to have you. You find the link to the Patreon in the description. Join that, and we'll get you right in today. We'll be ready for our live stream tonight, 6 o'clock Eastern. We do one every morning at 10 a.m. and 6 Eastern, and I record them all. They're all available for everybody in the Discord. So, guys, I hope you like in the comment. If you like the fact that I'm bringing videos every day, and hopefully they're helpful to you in some way, leave a like and subscribe, and share a comment. Share some love in the comments. Let me know what you think of the videos. Let me know what you would like to learn, and just interact there. We'd love to see you. Until the next video, we'll see you tomorrow. We'll talk to you later. Bye-bye.